Hello friends, let's start our review of the leverage of the PrimeXBT margin trading platform in stock indices, commodities, forex and cryptocurrencies. How does leverage work? Leverage is a key feature of a PrimeXBT trading platform and can be a powerful tool for a trader. You can use it to take advantage of comparatively small price movements, gear your portfolio for greater position size, and to make your capital grow faster. Leverage works by using a deposit, known as margin, to provide you with increased exposure. Essentially, you're putting down a fraction of the full value of your trade, and PrimeXBT is providing you the rest. Our products allow traders to gain exposure to major cryptocurrencies, such as Bitcoin and Ethereum and others, without tying up lots of capital. PrimeXBT is an advanced, award-winning margin trading platform offering a wide variety of Bitcoin-based CFDs with added leverage in both long and short positions on stock indices, commodities, forex, and cryptocurrencies. Our products allow traders to access a vast array of trading instruments and build a diverse trading portfolio without tying up lots of capital. BTC United States dollar trade example. For example, you want to buy 10 bitcoins at a price of $10,000. To open such trade with a traditional exchange, you would be required to pay 10x $10,000 for a position of $100,000, ignoring any commission or other charges. If the Bitcoin price goes up by 5%, your 10 bitcoins are now worth $10,500 each. If you choose to sell, then you'd have made a $5,000 profit from your original $100,000 investment. Now check out 100 leverage trading with the PrimeXBT platform. Here you'd only have to pay 1% of your $100,000 position, or $1,000 to open such trade. If the Bitcoin price rises by 5%, you would still make the same profit of $5,000, but at a considerably reduced cost. That means that profits can be hugely multiplied. Benefits of using leverage. Magnified profits. You only have to put down a fraction of the value of your trade to receive the same profit as in a conventional trade with any other exchange. Gearing opportunities. Using leverage can free up capital that can be committed to other investments. The ability to increase the amount available for investment is known as gearing. Gaining from the market fall. Using leveraged products to speculate on market movements enables you to benefit from markets that are falling as well as those that are rising. Leverage calculator. Leverage calculator allows you to calculate the total amount of buying power that you will get on the PrimeXBT platform based on your capital. Leverage is not a loan in the usual sense of the word, no interest is charged for using it. The funds are not credited to the trader's account, they go straight to the deal. Here's another example of calculating leverage. Let's say there is $100 on the trader's account, the loan amount is $100, the transaction amount is $10,100. If the deal is unprofitable, then when the trader's funds decrease to $20, it is forcibly closed. $10,020 remains on the trade account. The borrowed $10,000 goes back to the broker's account, the trader's loss is $80. If the transaction took place and the profit was $900, then there will be $11,000 on the account for the transaction. Of these, $10,000 will go to the broker's account, and the trader will receive back his $100 and $900 profit. Advantages and disadvantages of leverage. For many traders who do not have their own significant capital, leverage has become a kind of lifesaver. Indeed, with its help, you can get access to serious deals and make good money. At first glance, this financial instrument has only advantages. It allows you to conclude large transactions and get good profits, provides beginners with the opportunity to increase their own deposit several times in a short time, allows you to place bets that exceed your financial capabilities. But there are pitfalls when using borrowed funds. High potential incomes are directly proportional to the same high risks. Perceiving a loan as real money, a trader does not learn to manage capital, but focuses only on the size of the transaction. Let's consider the advantages and disadvantages of leverage using a calculation example. Let's say a trader has $500 on his account and he decided to buy shares worth $100 each. Without using a loan, he will be able to purchase only 5 shares. He simply will not have enough money for more. But if he uses a broker's loan in the amount of $100, he will be able to afford to buy 100 times more shares, that is, 500 shares. If the trade goes in the desired direction, then the value of the shares will increase. Suppose it grew by $1, then this would mean that when selling, The trader will receive an income of $1 from each share. It is easy to calculate that without the use of borrowed funds, the trader's income would be only $5, and with it, $500. Not a bad result. But the situation can't be reversed. If the deal is unsuccessful and the value of the shares falls by $1, then without a loan, the loss will be $5, $1 from each share, and using credit funds, the loss will be $500, i.e. the trader will lose his entire deposit. Attention! If a trader does not know how to manage capital and predict the most likely outcome of a trade, then a large leverage can only harm him. That is why experienced investors advise beginners to use small loan amounts, $150, $120, in order to be able to make a profit, but at the same time realistically assess their capabilities and not lose all capital at once. Leverage for trader and investor. What is the difference? Trader and investor are different concepts. They trade in the same markets but use different strategies, which means they need different financial instruments. The leverage service will have special features in both cases. Reference: a trader is a natural or legal person who makes transactions on the exchange, focusing on the state of the market and calculating the short-term perspective. The trader trades quickly and frequently, constantly monitoring price fluctuations. An investor is an individual or legal entity who disposes of his own funds and buys assets on the exchange in order to obtain profit in the form of interest or by increasing their value. But an experienced trader can operate with a large loan size, and this will not affect the risks, but will make the operation many times more profitable. An investor often disposes of large amounts that are available on his deposit. When concluding transactions, he does not use loans, or does so very rarely, because he buys shares for a long period, and it is not profitable for him to pay leverage all this time. How to use leverage correctly? Leverage is a financial instrument that, with a competent approach, allows you to make large transactions and get good profits even on small deposits. In order to use this tool correctly, follow simple recommendations. Focus on your own deposit. Calculate the risks based on the amount available. It is better to use a small amount of borrowed funds, which will not allow you to lose all the money at once. For any leverage, never trade on the entire deposit. Ideally, one operation should account for 1 to 2% of the deposit amount. Be sure to set stop-loss levels. This will help reduce risks. Important: stop-loss is an order that fixes the financial result when the selected instrument reaches a certain price. The stop-loss parameter can be set before opening a position or after. But there is one important point: for a sell trade, the specified price of a financial instrument must be no less than the current market price, and for a buy trade, no more. Thus, leverage is a good financial tool for those who have already learned how to manage capital and have a low percentage of losing trades. In the hands of an inexperienced trader, such a tool can lead to a complete loss of your own funds.